Okay. Yeah. Okay. Thank you. Okay. Since yesterday we are just discussing on just on high level overview on controlling, right? So to begin with controlling, there are certain basic prerequisites on FI side we need. With these prerequisites only, we can start working on the controlling. So today I'll just share a few insights and basic configuration I'll show in the system, uh, then how in the real time we work. Okay, let's define, we'll create some company code. We'll create some variants, chart of accounts. We'll touch base on little, just on high level, why it is needed on controlling area. Then we'll talk about ledgers and we'll create some GL account. When we do these structure, basic structure, and we are good to start with the controlling. Let's take an example. Like, just imagine, say sometime in the basic classes, you need to imagine yourself, okay, because there are many experienced people are there and a few freshers are there. Just imagine, you went to on-site and you are discussing with the customer. The customer says, we want, they will say, they will explain, okay, we have 3 company codes. So you will understand, okay, there are 3 company codes. HU10, just example, HU20, HU30. Then client will say HU20 is my main company. Okay. So then they will say where exactly it's located. So you will ask, the client will say, okay, then they'll give some briefing. They say, in the workshops, they say, okay, this is my main company, which is located in US. Okay, let's put like this so that you will understand. So these are the company codes. Company codes. There are 3 company codes. So again, the question comes, where are these located? Okay. So one company is in India, IN. One company is in US and one company in Germany. Okay. So then again, so we know the currencies. Okay. So India comes in INR, INR. So then it is USD, then it is Euro. So this is what the basic structure you understand. Okay. Then the client will say, okay, USD is my main company and these 2 are sister concerns. And the question comes, so the client will say, I want group reporting. So the question comes, how we are going to do the group reporting. That's a main objective. There is a one rule, the standard rule, when you want to perform, these rules are important. Okay, because logically you need to understand, because when we have these 3 structure, just imagine if you have some 50, 60 company codes. The first rule to have a group reporting, we should have, or in system to perform group reporting, 2 things are very much important. All the company should have, all the company should have same chart of accounts, and physical year should be the same. This was like first level. So at the first basic understanding, since they say this is my main company, okay, main company, and these are the subsidiary sub companies. So to have the group reporting, the thumb rule is this. All the companies should have same chart of account and physical year. So now we understood. So let's go in the system. Let's simultaneously we will create so that easy to map.
Vinod, I
Yeah,
have a
tell me.
question. If you go to
Yes,
the
please.
Excel file,
Yeah.
see, let's assume, because here there are 3 regions, right? India, US, and DE. Assume that India company code follows the fiscal year.
I'll come back. No worries. I know your question. I'll come back. Let's
Okay.
create the structure.
Okay.
Okay. Can you just go on mute, please? I'll come back. Okay. No worries.
तुम गा सकते हो
Slash. Yes, can you go on mute, please?
आए हो मन्नत
Just let's create, we client will say okay, create. let's create like simple, okay, Indian operations. So we'll say one is in Bangalore. So region IN, currency INR, and language. Just simple structure we will create.
We know this SAP screen, is it S4HANA?
S4HANA, yes.
Okay.
Maybe that classical view, that's the reason you're feeling like that. It's a S4HANA. Yeah, Indian operations, just like, keep it as like HUL, region, IN, country. Then this is more enough to proceed further. Okay. And just create FI structure. Just create this transport request. We'll just create. Okay. Let's create another two companies. Go back. Let's create another company, which is HU20. Just create it as an example, as New York, right? US, USD, English. I'm just building a structure. I'll go in detail. Just pay attention because you already know this, but still, I'm just defining structures. Okay. Okay. Let's create the last company. Show 30. Show 30. So we defined the main three company codes and the regions. And okay. So the first thumb rule I said, when we want to perform a group reporting, all the company codes should have same chart of account and same physical year. This is a standard thumb rule. But we already know India is following April to March. US, they follow Jan to December. And Germany also follows Jan to December. And the question comes, how are we going to handle? Because it is following April to March. There is a inconsistency at the first level. For this, we have a ledger concepts, how we can handle. First, let's build the structure, keeping group reporting as a first priority. Let's build the structure. So we already know the thumb rule says to I want to perform group reporting, all the company's codes should have same chart of account. Let's talk about first physical year. So let me mark physical year in bold. What we will do at the first level, we will keep all the company codes as the same physical year as Jan to December. Okay, at the first level, because we want to have the group reporting as a first priority. Okay, Jan to December, Jan to December. So let's go in the physical period variant. Let's create physical year variant. So since all the structures are ready, slash OB29, just go to the transaction. Okay, let's take K4. Okay, so just copy this standard. No need to create, just take standard. So we'll just mark it as H4. Let's take it HUL, Jan to December. Because this is like, FI, which I don't want to go in detail, but what we are doing here, I'll explain you the logic, how the data and how it get interlinked. That is very important. Okay. So now I have created the physical period variant H4 for all the company code. In this way, when you look at the first thumb rule, we clearly calling out to maintain the group reporting. The two parameters are very much important. One, physical year and chart of account. All the company code should have same chart of account and physical period variant. And now we have achieved this with the help of physical period variant. All my company codes are following same physical period variant. Okay, let's go to the posting period. In too technically, if you go in the posting period, like, every companies will have, based on during the month end activity, we will create different posting period variants based on the company code. But for that example, what we will do, we will create a different for the posting period. In S4HANA, there is a specific feature, especially for the posting period. Based on the company code, you can open and close the posting period. That's the reason we don't want to maintain all. We will maintain separate posting period. Okay. So let's go in the system. And I have created and assigned the physical year. Okay, we will do the assignment because the thumb rule says all my company codes should have same structure. Okay. Okay, let's go to the transaction OB37. So let's give my company code. See here, I have India operations, US and Germany. The link is H4. So we will try to give all the company same so that this will help in my group reporting. Then the first thumb rule satisfied, meaning this is a structure when we are building and we need to follow this. Without this, group reporting is highly impossible. Okay, so let's go to the next one, the posting period. Okay, go back. So let's create. We'll just take HU10 same only. HU10 Indian operation. Operations. HU20 US operations. HU30. HU30 German operations. Okay, let's save it. So in your structure, you have created posting period. You have created HU10 for company 10. HU20, HU30. And you already know this, like physical year, posting period definitions and all, the physical year is like 12 months of your accounting period. And, the posting period is something like, it's a duration, like, where you will post all your financial transactions are recorded, right? So in the period of 12 months, it's a time frame basically. So during which you will enter the financial transactions. Okay. So you have created your posting period, and let's assign these posting periods. Assign posting periods. assign posting periods. And this will, I mean, these are the basics, guys. Okay. But let me explain the logics, then you will understand. Let's create this. Okay. There is a transaction OBBP where you will assign your posting periods to the company. So you have created different posting periods. So HU10, HU20, HU30. Okay. And we have one more variant, open and close posting period. Let's open some periods, close periods. Okay. /n OB52. This is what the functionality like, in S4HANA. In ECC, that's different, but here you can open your posting period based on as per the company code. Okay. So just create a period like this. So for special periods, you will enter. And this one, this especially the third piece, like, this one, I'll explain in the controlling in detail. Just now, for the basic structure, we will create like this. Just save it. Let's follow the same for other two. You're just creating the posting period, open and close posting period. You're just opening all the periods. Okay. So what we did so far, like, we created 3 company structures. In the 3 company structure, hold on 1 second, 12, 16. Yeah, here. So what we are trying to do here, like, the client says, like, we have 3 company codes, they segregated main company and sub company. But the objective is like at the first level, we need a group reporting. To have group reporting, 2 important things are mandatory at the high level. At the first level, all the company code should have same physical period, year, and all the companies should have same operational chart of account. So what we done here, like, we created the same physical year variant, and now we have defined all the posting periods, and and finally we have one variant. It's like field status variant. Okay, we will create that field status variant for all the company codes. We can maintain the same thing. Okay, so /n OBC4. Just copy the standard. Just copy HU00. We just keep field status variant for HUL. HUL. Just mark it. Copy all. Okay. Okay. No need to create any field status specific, but we'll just create the field status HU00. HU00. Okay. So, and we have assignment of field status. field status variant. Okay, just go to the transaction. /n obc5. Let's take HU. So where we are linking our field status variant. Okay. Okay. Now we have done the basic company structures and physical period variant. So before going to the chart of account, so we are specifying one point here. All the company code should have same chart of account and physical year. So when we want to perform the group reporting, right, all these companies will be first linked to your leading ledgers. Okay. All the companies will be defined in the leading ledger. So all the companies will have same leading ledgers and same physical period variant. And now we will define the chart of accounts. Okay. So in chart of accounts, we have basically three. One is operational, group, and country specific. Operational, we know, like, for all the company codes to have the financial transactions day in, day out, they want this operational chart of account. Whereas in group chart of account, again, it depends on the group reporting. When we clearly call out here, so companies should have to perform the group chart of, they want to perform the group chart of account. For that, we need a separate group chart of account to perform the consolidations and reporting. There is another one, country specific requirements to match our local reportings. They want, uh, local tax reporting. For that purpose, we need to create one more chart of account, which is very specific for country. But if you look at the structure, since the main company is in US, in India, so definitely we need one specific chart of account, because in India we are following April to March. Again, we have a different tax local reporting and all. So definitely we need one country specific chart of account. Okay. So the thumb rule says for reporting, all companies should have same operational chart of account. What we will do in while creating operational chart of account, we will assign all the company codes same operational chart of account. This is a rule because the first rule we satisfied with all the company having same physical year, and now to have the group reporting, all the company codes should have same operational chart of account. Let's go and create the operational chart of account, then you will understand the logic. Okay, let's go in the system /n ob30, and this is a place we will create the chart of account. Let's make it HU, HUOP, HUL, HUL, operational chart of account. Okay, let's maintain English, and the length, keep it as 6. Okay, just save it. Okay, so since you have all the operational chart of account, let's go and create HUGP, HUL. You will create group chart of account, group chart of account. Okay, maintain English. So just define number 5 for your representation purpose, like, keep it as different number range. The GL number range, it keep it as 5. I want one more chart of account is HUIN. This is very specific for a country specific. Country specific. Okay, India, because we are doing a local reporting in India, and it has a different physical period. Okay, just create English, and for to perform the country specific, just keep 04. Okay, here, if you look at this, we created a group chart, HUGP. We created this group chart, and just go to the operational chart /n. Okay, just go back. See here, the thumb rule, what I'm trying to say here, all the company codes should have same operational chart of account. We have operational chart of account. When you want to perform the group reporting, so this group chart of account, it should link to your operational chart of account. See here, if you come here, you have your operational chart of account, and whatever the group you have created, right, that you will assign it here so that the link will perform. So when you are extracting the group reporting, right, since the group reporting group chart of account is linked into the operational chart of account, this will fetch all your company codes. The reason, in the operational level, see here, all the company codes, you have assigned the chart of account. What chart of account you have assigned? You have assigned all the operational chart of account. In the operational chart of account, you are linking your group chart of account. When you extract, when you perform the group reporting, system will fetch from the group reporting, it will fetch operational. From the operational, it will fetch all the company codes. Okay, let's do the assignment so that you will understand. This is IGA, assignment of chart of account. Okay, let's go to the transaction /n OB 62. Okay, assignment of chart of account. Just pay attention here. HU10. The first step, what we decided. So we said all the company codes should have same operational chart of account to perform the group reporting. This is what you will define. You will assign like this. And in India, I have a different physical period. In the, I mean, just imagine like US also following Jan to December, Germany is also following Jan to December, but whereas India is following April to March. So definitely, so we want to have some local reporting. Then we have created one more chart of account, which is specifically for the country specific. Okay, so that assignment, you will do it here, HUIN, which you have created. Okay, so once you save it, this is where the assignment will happen. So now in your structure, it satisfy both the conditions, all the group reporting, all my company code having same operational chart of account and having same physical year. Okay. So very specific now, before going to the ledgers, the controlling area, like, just we will touch base this in CO, but on very high level, like, the controlling area, mainly for why we need this controlling area, and it's main responsible, like, we do costing and profit. Any organization, right? They want to see the management reports, and they want to analyze the cost and analyze the profit within the company, right? So they need definitely a controlling area. Okay. So what we will do, quickly we will create the controlling area. The main important of this entire structure is depends on the ledgers. Okay, so let's go and create one controlling area before creating a ledgers. Till here you are understanding? I'll take a pause here, like at least you know this structure. I mean, are you correlate this structure when a company, see, in the real projects, definitely if you're working in the real projects, not even one company code won't be there. You will have multiple company codes, but the thumb rules are very important. How we're going to do the group reporting, how, logically, if you speak, the entire companies, right, the basic structure, physical year variant plays very, very important role, because this will decide whether you want to have a ledgers, whether you want to have a non-leading ledgers. Correct. So I'll take a pause here, at least on high level you're understanding.
Yes,
This is just an
it's
FI,
good.
but yeah, just see if it is any freshers also, please call out, but it's a simple structure, because see, the objective is main company, subsidiary company, why, how we want to do the group reporting. So that's where we are just defining few things. That's it. Okay, let's go to the controlling area before going to the ledgers. Let's go to the controlling area. Okay, let's save /. Okay, KP. Okay, let's take one controlling area. Show session. Let's take. Okay. So since you have a multiple company codes, just take the cross company code and the currency type. Just pay attention. You want to make it as group. See from where this currency comes. Okay, let me show you something. This is very important. We need to know. So right, like in SAP there are some defined standard currencies. Okay, again this is pure on FI, but just since we have this currency, let's have one few points on this. In SAP there are some standard currencies like HU10, HU20, okay, 30, 40, 50, and 60. This 00, right? This is document currency. Okay, during the time of posting, you can select this currency. This will be a document currency. All this kind of discussions will happen during the client, discussions. Okay, document currency. This is company code currency. Company code. And this is controlling area currency. And this is group currency. And this is like hard currency and index based. Index based currency. And this is global currency. When I selected this group currency here, when I took the cross company code, automatically when I enter this 30, right, automatically the USD currency came. This currency will come from this place. If you go to the structure SCC4, this is what your client. See here, I'm using the client 100 and the currency here it is mentioned as USD. And this is where the main in the organization structure also, like when no need to ask anyone, like once you join the organization, just go to the transaction and what is your client, just take what is your client number, then just go to the SCC4, then you will understand which currency they are using. Easily you can correlate. Okay, and this currency is coming, this 30, the global currency, I mean this group currency is coming from this screen, from SCC4. Okay, so now I have created my operational chart of account, HEOP, and I have a physical period variant, H4. Okay, then we will create HUL, just on hierarchy. Everything will be covered in the controlling. These are the standard hierarchies. STD, just yes, TD, HIR. Okay, so just save it. Just create, save. What you are doing now, we're gonna assign your company codes for this controlling area. And these currencies, in every stage, you will define these currencies. Company code while creating, you have defined, right? Based on the company structure, you will define. And this controlling area, you can define in your own currency. And 30 is for group currency. And there is a specific field where you will define hard currency and index-based currency. In the currency settings, we will define this. Okay. So now, okay, just save it. Okay. Just go and assign company code. Just click at new entries. Just type HU10, HU20, HU30. Okay. Where you have defined you are assigned these company codes to the controlling area. For this controlling area, we are assigning our company codes. It's taking some time, but okay. Okay. Now there is very important thing, like activate the components. Again, these are like projects, cost objects, cost centers, order management. Again, we will discuss this in detail in the controlling. Just for this purpose, we will just assign this physical year and just save it. Later we can activate this. Okay. So this is where our uh, controlling area we have defined. Okay. So HUCC, all the company codes, we have mapped it. Now the very important is our ledgers. Okay. So in ledgers, we have two types. You know, ledgers, right? Like, the just a basic second ledgers. If you talk about what is ledgers, it's just like, where you will post all your final entries, right, to summarize and, classify all the accounts and transaction. Or in other very simple way, it's a summary of all amounts where, you entered in the journals. Okay. So ledgers are of two type, broad structure. If you're talking about S4HANA, there are two types of ledgers. Okay. Standard ledgers and extension ledgers. Okay. Again, if you break the standard ledgers are of two types. The one is your leading ledgers. The other one, leading ledgers. Other one is non-leading ledgers. Okay. Whereas extension ledgers are of three types. Extension ledgers are of three types. The first one, standard extension ledgers. Standard extension ledger. Ledger. The second one, stimulation ledger. And the third one is predictive. Predictive ledgers. Okay. If you look at the org structure at the first level, we know, okay, at the first structure, at the base level, we know that, like, when we have three company codes, and we know that, like, India is following April to March. But at the first level, when we want to perform the group reporting, we created with Jan to December, and we have assigned to all the company codes. So to have our local reporting and to have April to March, the posting periods, right? So then we need to define our non-leading ledgers. So for India, we need to define, this is leading ledger is a standard. It is for all, it is applicable for all the company codes. Whereas non-leading ledgers is very specific for a country where you should perform local reportings, correct? So that time we need to create a non-leading ledgers. So, and we have another, like, extension ledger. This extension ledger, standard extension ledger, is for additional reportings we can create. And very important, like, nowadays, most of the organizations we are using like stimulation ledgers and predictive ledgers. So in the kind of stimulation ledgers, right, you see this foreign currency revaluations in ECC, like, during the month and we used to perform. But with the help of stimulation ledgers, you can check, uh, unrealized gain, unrealized profit, everything you can check on daily basis. You create a stimulation ledgers, so set up those accounts, then you can run every day. You can see, no need to wait for the month end. And the predictive ledgers, there's more we use in the controlling side. No need to build entire org structure, or no need to build all the configuration. So create one predictive ledgers, and you can estimate when you want to perform MTO scenarios. There are some scenarios, right, in the organization. They want to launch some car or some product. Then they will predict with the help of predictive ledger. They can estimate, okay, are we, whatever planning we are doing, are we meeting with the exact standards, or are we going with the actual plan you can do, budget you can do, you can see the variances, everything you can see with the help of predictive ledger. No need to, build all the structures. This is where these ledgers will work. with the help of predictive ledgers, you can predict, okay, if I launch this product, do I get an income or do we incur a loss? Everything you can do with the help of these predictive ledgers. Most of the organization were using simulation ledger is very frequently they're using now. Okay. So for our purpose, the main objective is here. India is following April to March. Let's create one non-leading ledgers, then we can proceed. So uh, just I'm just asking like you know how to define user-defined currencies in the system. In S4HANA, it has a very specific object where you can create a user-defined currency. If you don't know this concept, I'll explain, but just confirm. You know how to define user-defined currencies in S4HANA? Hello? Am I audible, guys? Confirm.
Yes, you're audible.
Okay, you guys know how to create user-defined currency because there is a lot of changes, meaning in ECC to S4HANA, there is a very thin line is there in S4HANA because then one single transaction we will create currencies and our ledger. Okay, if you don't know, let it be, no problem. It will be a simple session. Okay, so when you're having a discussion with the client will say, okay, SAP has given this many standard currencies, I mean, currency types. The client will say,
OB03,
sorry?
OY03, that is the transaction code which is using.
No. I'll explain. So when you are having a discussion, just imagine like, you are in the client place and when client was briefing all this basic structure. So client will say, hey, I need some user defined currencies. Then you will ask, okay, what currencies you want to define. Though you will say like, SAP has given these many standard currencies, so we can use. Then client will say, no, I have some local reporting. I want something very local as per my requirement. Create some HUGH or something like create some two additional user defined currency. Okay. User defined currency. User defined currency for my local reporting. Client put this requirement for you. So, okay. So immediately if client says something, correct, you should think logically as a consultant. So there is very important key configuration is there in S4HANA, very specifically for S4HANA. Let me insert a row above. There is one, the thumb rule is there. When you're defining your structure, you should be very careful when clients say we should not accept immediately, but there is some logic is important. So you need to put a point. Yes, this is possible. We can create user defined currencies as per your requirement, but there is a limitation. Okay, for a asset accounting. Limitation for asset accounting. What is a limitation? Asset accounting, a rule, this is a rule or you can call it as a limitation. Asset accounting, reports, I'm talking about asset reports and the standard asset accounting will support only first, or it will support only 3 SAP standard currency. Okay, doing at the reporting stage, you can see only it will support the first 3 standard currencies. It will not support user defined currency. You need to call out this point. User defined currency. There is a limitations, and this is where system have some limitations. So in the currency side, but there is one more limitation on the ledger side. Especially, this is also a rule for asset accounting, because these are all the points you need to discuss at the first and very basic high level when you are having a discussion to the company code structure. So when client was insisting you to create, because client was not aware, because SAP HANA is which we are handling, right? So client will say, I need some user defined currencies, please create as per my requirement. But you can clearly call out, yes, I can create, but there is one limitation. It gonna directly impact, you can't see certain things, asset reports in local defined currencies. So if you're okay with that, take acknowledgement and then proceed and create. Okay. So there is another rule for ledgers. What will happen? See here, in your structure, in your structure, a company codes following two different physical period variants. Because see, look at the group reporting level, you have defined Jan to December, Jan to December. For local reporting, you are defined for India, you are defining April to March. Okay, April to March. So in your structure, a company code or a company having two different physical period variants, right? Asset accounting will throw an error message. So to overcome, the workaround solution is, again, the point is make it very clear. If your company code structure having two different physical period variant structure like this, see here, in group reporting, I've maintained April, Jan to December, Jan to December. But I know I want to do India local reporting. I'm creating one more physical period variant to match with my local reporting. Non-leading ledger, I will create April to March. Definitely there is a two physical period variant. System will really get confused. So that in asset accounting, when we have this kind of situation, you need to create one more non-leading ledger for asset accounting. Okay. I will show you this. So you will understand the logic. Okay. But for you to understand, it's a very simple, the limitations. Okay. So one limitations in currency, we can define user defined currencies, but that will not support the asset accounting, because asset accounting will go with the three standard currencies. Okay. The first three standard, and it won't pick anything user defined currencies. That's one limitation. Another limitation, if any company code structure having two different physical period variant in the structure, you have to create one more non-leading ledger for asset accounting. Okay. So now we discussed 2 points. Let's go in the system and let's create one user defined currencies. Okay. There is a transaction code. Just straight away, this is what the functionality in S4HANA. So currencies and ledgers are in one place. Okay. See, these assignments and ledgers are very crucial, guys. Okay. See, I'll show you the transaction. Let's one more time. /n FINSC underscore ledger. But you're understanding, right? So why we are going to create a non-leading ledger? Non-leading ledger to match with my local reporting. India is following April to March. In the beginning of the class, someone raised this question. India is following April to March. What are we going to do? At the group reporting level, we will keep every company has the same physical period variant, but in the local reporting at the at the ledger level, we will create non-leading ledger to match my April to March period. So then we will proceed. Okay. So now we are in the ledgers. I mean, pin drop silence here, but you guys are following, please, because these are very crucial. Matlab, it is not very specific for controlling, but at least this is a high level for FI. People should know this, like, why we are creating a ledgers, why we are creating non-leading ledgers, how we're going to perform the group reporting. Are you able to follow till now?
Yes, Vinod.
Yes, Vinod.
Yeah, thank you.
Yes, Vinod.
Perfect. Okay, because these are very crucial, because one wrong mapping can lead into multiple inconsistencies. Okay, let's see here. This is what I was just referring to. When you go in the ledgers in ECC, we have it in two different areas where we will create currency separately and ledger separately. But in S4HANA, this both transactions merge in a single transactions. So the first point, like, let's go and define some currencies. Client was telling, yeah, please create some user defined currencies. Okay. So let's go to the currency type. Okay. So there is very important thing is company code specific conversions. Okay. When you look at the currency type, there are two settings are there. One is global currency conversion setting. Another one, currency conversion setting for company code. Okay. So here, let's go and create one currency, which we are creating right now. ZH, like, so mention user define currency, take AUD, okay, make it AUD. Another one, ZK, okay, user define currency, JPY. Okay, so client will say, I want this kind of user defined currencies. Okay, now the question comes when, sorry, somebody have a question? No? Okay. So when you're discussing with the clients, you need to ask again these questions. How are we converting these values? I mean, meaning definitely there is a currency. The main objective of any user-defined currency is very simple. They want to see the value you posted in document currency. Okay, they create user-defined currency to match some local requirement. Okay, in the local currency. How system will do? System will take base from your document or posted currency and it will convert with the help of exchange rate. Okay, let's take M as an exchange rate. And there is a translation ratios are there. There is a translation ratios. Then system will give some functionality on what basis you want to convert into a local currency. You posted in INR or you posted in USD, but the client want the reports in JPY. How system will do? System will come and check this currency setting. Then what it does, it will they want to see in the JPY what system does. System with the help of exchange rate and with the help of translation, then it will convert this document currency into a local, whatever the value in the document currency USD you posted at the posting stage, first level you posted in USD. In the backend, what system does? System knows I want this value, USD value in JPY. With the help of exchange rate and with the help of translation ratio, system will convert into local currency. To have this, there is one important step here, company code specific conversion. Okay, if you activate this like this and you're not activated, okay, first where we will need to create, if you are activated this company code specific conversion, this JKY you need to create here the currency conversion setting for company code. And since it is not activated, right, and this currency which we are talking ZH you need to create in global currency. Okay, so I'll show you what it means really meaning. Just go here. Okay, so ZH, just create. So we are defining AUD currency. Okay, and we have source. Okay, it's again source is a document currency. See here. See here, you can define anything. So logically, system need to understand, okay, while posting, you posted with the company code currency. With the help of this company code currency, system should convert all the values with the help of exchange rate, with the help of translation date, a ratio, and convert into a local currency as AUD. Let's go by case. Let's have taken my source as my company code currency, and I will take as exchange rate M. And here, if you look at the translation rate, for one currency, for this AUD, okay, for a single currency, either you can convert or you can have the translation either any one, either document date or posting date or a translation date, any one, okay, any one. You cannot select all three. For a single currency, what system does, system will come and check, it will take the base as my document currency, then you go to the exchange rate, then it will come to the translation date. If you select the document date, system will go and check, okay, what is a document date? With the help of document date, with the help of exchange rate, keeping base as the your posted document currency, it will convert into AUD and fetch the values. Okay, this is one step. Okay, so now you understood this, how system will convert into company code currency into user defined currency with the help of exchange rate and with the help of any one of the translation date. Okay, for single currency. And here we don't have any company codes, correct? So that is one important point. This currency is a global currency. That is where you have defined here in the global currency. Anybody can use this. Any company code can use this currency. And if they're using for that company code, it will go with only one translation date. You see, sometimes client will say, okay, you are converting all these values. Just go with, instead of document date, convert with the posting date. So for a single currency, there is only one option. You cannot post in multiple way. Either you have to select document date or either posting date. But whereas you created uh, another company, another user defined currency, right? We'll show you. The difference you need to understand here. Here there is no company code. It's a global. Anybody can use it or any company can use it. Okay. But whereas okay. So now if you go to the currency type, see here ZK, where we marked as company code specific conversion. Now come to the currency conversion. Just press enter. See here, define new entries. Did you see the difference? You see the company code, but whereas in the global currency conversion, you don't have an option. Okay. So for the company code, see here, you have 3 company codes. Just go with 3 company codes. And your currency, you can take it as you created ZK, correct? You have created ZK, the currency, user defined currency, and it is JPY, and the source. See here, company code, you can take it by the document date. Let's take exchange rate. See here, this is where the logic now important. Currency is same currency at the different company code level. You can have different translation types or translation ratios. We call it as, like, you can select document date, you can select posting date, you can have the translation date. What system will do for each company code wise, based on the exchange rate, based on the document type translation, one value you can see from the document date. Another company you can see the same currency. Currency is not defined. I mean, currency is a standard here, but how you are translating the value, how you are fetching the value from the company code with the help of exchange rate. Document date is different, posting date is different, correct? So with the help of these translation ratio, for same currency, you can get different values, okay, through the document date, posting date, and translation date. System will understand, okay, but whereas in global currency, first thing that is currency is one standard way where there is not defined for any company code. You can use for your company code, but there is only one translation ratio. But here in the global currency conversion setting, you can have the same currency in different versions or in different translations. You can get the values. Okay, that is where this currency conversion setting will come in place. Same currency, you can do it multiple translation. Otherwise, you want to select documented, you can select documented, but that kind of option was not there in the global currency. So logically, system what it does, simple, that you will see in the real time, but simple. Basically, you define user currency is for local reporting. So finally, you need a value, correct? How system will know? System should know, right? With what? There should be a base. So I want to see the values in JPY. Definitely there should be a base. So the base is my document currency. While posting a document, I posted with USD. What system does? System will go to the exchange rate and there is a translation. So today I have taken document date as my translation. Based on the date, it will come and see the exchange rate. Then it will convert the value from document, whatever we posted with the USD, and it will convert into JPY. That will happen in the backend. But the logic you need to understand is here in the currency conversion setting, you can have different translation ratios based on the requirement. If client will say, no, no, for company 20 also I want documented, possible. But logically, when you're having a discussion, these kind of discussions, and you need to clearly call out, okay, I'm defining user defined currencies. How you want to see the reports? How you want to see the translations? Do I create a global currency or do I, get into a currency conversion setting? So client will say, okay, let's create one currency where I want to see have different translations. I want to see with the document date, some transaction I want to see with the posting date. So to activate this, you need to activate this indicator. This indicator is very important. If you activate here, you need to create in the global currency conversion setting. Okay. So far clear on this currency. This is a little hard, but I'm just explaining you. So if you have any questions, just let me know before proceeding further. It is clear? Currencies?
Hi, Vinod.
Yeah, please.
Can you please explain again the translation date type?
Mhm.
I didn't
Okay.
get it.
Yeah, no problem. 1 second, let me see. Okay. So till here you understood, right? When you're defining user currencies, you need to select either any one option. Once you select,
Yes, I got it. But
yeah.
thing is, I'm just a bit confused.
Mhm.
This document date or translation date, how it will fetch the exchange rate? It will fetch based on the document date which we give in OB08 code.
Yes. That's the logic. All the exchange rates, everything you will maintain, right? OB08, OB07, OBB0, right? All this configuration from there it will fetch. See, while posting, two things will happen now. While posting a document, either you will take document date and a posting date, correct? So,
Yes.
so based on that, system will convert in the backend.
Okay.
So this is where the translation happening. Either client will say, no, that's okay. Convert all the values uh, with the help of document date. Possible,
Okay.
Then you want to select posting date, you select the posting. That's again pure client requirement. But whereas in global currency conversion, we don't have these kind of options. Okay. And this currency will have only one. Either it will be the posting date. For if you're using for 100 company codes, only one option. We have to go with the posting date. No customizations can be done based on the client requirement. That's a main difference with currency conversion setting with the global. And here you can see in the global, we have a company code, but whereas in global, there is no option at all. Correct?
Can we maintain currencies in global and company code level both?
Yeah, you can.
Same
But
currency.
same currency not possible. Either any one.
Yeah.
Either you want to
Okay.
define as a user define. Global currency conversions. Otherwise, if you try
Okay.
also, I can show you. System will throw error message. Okay.
Okay.
So now, um, if no further questions, we'll go important to the ledgers. Okay. So no questions. Let's go. So leading ledger is a standard. If you look at this ledger, right? So here you see there's one activation and you will not see any activations there. So leading ledger is a standard. No one will no one will create one more leading ledger. No one will create. This is a standard provided by SAP. We use for all the company code. See here in our structure also, when we talk about leading ledgers, so leading ledger is standard for all the company codes. Whereas non-leading ledgers is very specific based on the requirements. So definitely I have a requirement. I want to see my reports in local reporting for India. Okay. So then India is following April to March. Okay. To have non-leading ledgers, okay, there are few important settings we need to do. Okay. Let's take like this.
It's country specific.
No, it's this non-leading ledger because we are doing it for uh, local reporting because India is following April to March. We want to see all our financials in April to March, right?
Mhm.
So then we are creating a non-leading ledger. Let's create one non-leading ledger. So, okay. So non-leading ledger. Before creating ledger, few important things we will create. One, create one physical year variant. So, physical year variant. Create one posting period variant. This is mandatory before we create. Okay. So before creating ledger, just go and create OB29. Let's create one posting period physical year which satisfy with April to March. Okay, let's take V3. Okay, just copy this. Let's make it H5. Okay, just for your easy purpose, June, April to March. Okay, so okay, copied. Okay, saved. Okay. In the meantime, in the Excel, we define H5 is April to March. Okay, so let's create one posting period variant to have a local April to March. Okay, OPBO. So HU, make it like HUOO, HUL, posting period. We can make it as like April to March. Okay, just one posting period we are creating. Okay. Okay, let's go HU00. Our purpose is very clear. So India following a different physical period variant, April to March, to have our reportings. So we are creating non-leading ledger, because this leading ledger, again, it will match to all the company codes where you can do all the group reporting. To have the group reporting, all the companies should have same chart of account physical year, and it should have same leading ledgers. Everything is assigned. But now to have a local reporting, we are creating a non-leading ledger. Let's go and create one non-leading ledger in the system. Okay, so let's go to the entry. So just create H7 non-leading ledger for HU, HUL or HU10, you can make it. So just press enter. Okay, so select this, just go to your company code settings. Okay, see here. Now we are very clear. We need to define. So we need to define for HU10, we need to define a non-leading ledger. Non-leading ledger is HU7. HU7, correct? We are creating non-leading ledger. The main purpose of non-leading ledger to have my reporting in April to March. And here you define your company for only specific to the company code HU10. I'm just creating a non-leading ledger. Then you take the physical period variant. So which you have defined now specifically for HU10. HUL April to March, correct? And you have created one posting period. See, you have created a separate posting period, HU10. When you try to post, see here, all the values, these currencies and everything, everything came from your ledger, correct? So now, what you have done now, you have created with the help of non-leading ledgers, and you have selected posting period and physical period variant, and it is defined with your currency. Just save it so that, sorry, okay, go on mute, please. So here you are telling your system, you define your system HU10 with the help of physical period variant, and now your ledger is created. So when you post a transaction, leading ledger and non-leading ledger, system will match accordingly. In the leading ledger, you will post the transaction in the first period January, and the same value in the local reporting, right? So 10, for example, right, like see, can you just go on mute, guys? Okay. See here. So you are defined, right? Two currencies you have defined.
टाइम पंक्चुअल आणि थोडंसं रश करायला लागेल.
Hello.
डिनरला येऊन तुम्ही रिलॅक्स.
Dipti, can you go on
You
mute?
have to go for mute.
Okay, leave. Okay. So in the ledgers, right? Just go to the company code settings. Okay. Just go to your company code. Okay. Just go and search your company code HU10, because you have defined some user defined currencies, right? So just go and search HU10, HU20, HU30. So you have defined user defined currencies. Okay. You define HK. You define HK. HK. And you define HH, ZH, ZH. Okay. This is where the mapping will happen. Okay. This is just a message. Okay. Just save it. Okay. See here, what you have done for the company codes, the SAP has given the standard currencies, and you have defined your global. Again, we have created company code and the global, and you have defined your user defined currencies, and that you will match it here. Okay. So now when you are creating your non-leading ledgers, and pay attention, it automatically you will see all these user defined currencies. The objective is, I'll put it in Excel so that you will understand how system will behave when ledger and non-leading ledgers. Okay. Let it save. Okay. Let's go to the company. Let's go to the ledger. You have created one ledger, H7 for the company code, H7 here, and see the company code. Okay, document splitting fine. See here. So for the company code, you have maintained physical period April to March and the posting. Okay. So you can match here. You defined a currency, right? Standard currency, HX. See here, and automatically comes HK. You know what it will do? Okay. You post a transaction in your ledger. Okay. Automatically, the same values will be reflected in your non-leading ledger with the help of currencies and currency type. See, for example, in the scenario, if you understand leading ledger, you're posting the first period in the ledger, leading ledger, I'm talking, the first period is Jan, whereas in non-leading ledger, your Jan period is what? Is a 10th period, because we are following April to March. You understand, like, correct? So how ledgers, how the system will understand because today I'm not creating only one ledger. I'm having a non-leading ledger also. So you will post all in your ledgers, correct? All the transaction will be posted to the ledgers. Immediately when you run the report and you want to see in the non-leading ledger, with the help of non-leading ledger, where we define non-leading ledger with H7 and with the physical period variant April to March and the posting period and the values. If you post in January, if you post 1000 And the same thing you can see in the posting 10th period, whereas in the Jan period, which is April to March, and all the currencies, whatever you're using in the ledger, currency type 10, 30, user defined currency, you can see all the values. Okay, so all the conversions, everything you have configured, right? So you will see all your exactly your leading ledger books, and exactly you will see the non-leading ledgers with the help of this non-leading ledger. Clear? So all the posting, see, you will keep on posting, your team will keep on posting like 20,000. So based on the period, system automatically update in the non-leading ledgers. When during the FI, maybe you would have seen this. You post a transaction FB02, you will post one expense two. So bank, you will post some transaction. Just go to the ledger and stimulate. Okay. And you will have one more, stimulate to ledgers, general ledger. There is some options, okay, where you go and see, where you can see the document, you can see the values in ledgers, you can see the values in non-leading ledgers, you can see the values in multiple currencies. If you follow this arc structure, you understand. So what you did, you define ledgers, non-leading ledgers, you have defined user-defined currencies in single posting of any GL. You can see all these transactions. I don't have any value because I can't show in live. Um, I'll show in the later stage. I'll show. We can see all this. Everything is interlinked. Okay. So now we have cleared so far like ledgers and non-leading ledgers, but we left with one more thing. It's non-leading ledger for asset accounting. Okay. So the same principle, because system will throw the one error in the asset accounting. As I clearly said, the rule, asset accounting, we need to create one non-leading ledger very specific for asset accounting, where your physical year should be Jan to December. Understood? Jan to December. Reason, if you look at this, why we created non-leading ledger? Because we have a local requirement. Because in India, following April to March, we went because that was a fair. Because while defining structure, that was a fair. But that will create another problem with the asset accounting, because if any company having two different physical period variant, asset will throw an error message. What SAP has suggested, it's a limitation for asset accounting. It's a workaround solution for asset. System says, or SAP says, please create one more non-leading ledger and create with the physical period for the company, like in the main group reporting we created, right, Jan to December. Create one more ledger specifically for asset accounting. Keep the posting, physical period variant Jan to December, so that system have a very clear understanding. Okay, so then system will come and check. Okay, so India is also following Jan to December. So system understand. Okay, there is no more different physical period variant. You understand the logic? Question comes. This will come when you have this kind of structure, multiple company code structure. First level system will understand, okay, if a company code having two different physical year variant, definitely system will not allow asset accounting. There is a issue, inconsistency. Company should follow the same physical year variant. Since we created one more non-leading ledger to match my local reporting, and as per the tax laws, we created April to March. So the workaround for asset accounting, create one more non-leading ledger for specifically for asset accounting, keep the physical period variant as April to March, sorry, Jan to December, because my company is using the group level, it is using Jan to December. This point you understood. This is very crucial in FI. So if no understanding, let me put it in very simple way. System, these ledgers are
Already,
yeah. Tell
sorry,
me. You go ahead, please.
in leading ledger already Jan to December, it's right.
leading ledger is
Again,
there.
why we require in asset?
Correct. That's what I said. That's what I said. For the same company code, see here, I'm not talking about USD or other company, because in these other companies we have only one physical period variant, whereas in India we have two physical period variant. One physical period variant for ledger, which is Jan to December, whereas to match my local reporting, right? Tax laws, April to March, we are doing all our books financials. What we did to accommodate that, we created a non-leading ledger, which is having April to March. See here, two things very clearly it will go. First step, when you are defining company only, you are defining at group reporting. Group reporting, all the companies should have same physical period variant. At the beginning only, we know India should follow April to March. You can't change it here April to March. If you do this in the beginning stage, April to March, you cannot perform the group reporting because this company is having April to March and this company is followed by Jan to December, where you can perform only group reporting for these two company. What is a thumb rule for group reporting? All the companies should have same chart of account and fiscal year, and this will fail at the first stage. So what do we do? Keeping the group reporting as a base, we created this one rule. All the companies at the high level or the first level, we follow Jan to December, but we know India is following the principles or reporting April to March is our financial book closing and opening, correct? So to accommodate that, we have a concept of non-leading ledger. So we achieve this because here, if you go and see all the financial transaction, if post in January, but you can see the values in Jan 10th period, balances, everything is matching. Whereas in asset accounting, when you have this kind of structure, a single company having two different physical year variant, asset accounting will not work. There is a issues, inconsistency comes. What SAP has suggested, when your company having this kind of structure, go ahead and create one more non-leading ledger for asset accounting, keeping Jan to December. In this case, system see here, system will come and see, okay, in the group reporting also Jan to December, and you know, non-leading ledger, it is April to March. For system to understand, system understood, okay, we are using separate non-leading ledger, it is Jan to December, and there is no inconsistency. For the company code, system understand my operational leading ledger is also Jan to December. Okay, since I'm creating one more asset accounting physical period variant Jan to December, so system think, okay, both company code having same physical year. See, basically, see, we know this. We know system doesn't know this. We know this. We want April to March for India. Okay, to get all our reportings as a workaround solution for specifically for asset accounting, we will create one more non-leading ledger which is having same physical period variant as my main company Jan to December. We will create that. And how we will map that you will understand once you create this non asset, you will understand the ledger groups, and you will make this asset as a representative ledger so that system will in sync. Okay, but till there you need to understand the simple to right now you need to, what you need to understand. So when a company having two different physical period variant, asset accounting specifically, you need to create one more ledger to match our assets with physical period variant Jan to December. Let's create, and then I'll show you the logic so that you will understand better. Okay. Okay. This is the limitations. Without this S4HANA, it won't work. This is where you are using different physical structures. So that's where in the workshops, you should be very careful, how many company codes are there, what physical, if you ask me, like, physical in S4HANA, physical year variant plays a vital role because that only deciding whether you want to go with the ledgers, non-leading ledgers. So let's create one simple ledger. So it's a simple creation of ledger is very simple. Just take H8. Okay. So non-leading ledger for asset accounting, just create. Okay. So save it. Then you assign your company code. Okay.
Vinod, one
Yes,
question.
yes, please.
For this
Even Rich name.
non-leading ledger,
Yep.
you have created a variant, right? So this,
Yes.
what is the main holding factor for asset ledger only when it is something which is
Mhm.
not available in material, AP, AR? What is that main holding factor for fixed assets?
Oh, can you just come again? The question,
See,
what is the main?
why only for asset ledger there is a need for creation of a variant? Why not for MM? What is the main factor for this asset ledger?
No,
When
no,
it
this
is
is
something which
yeah,
is
yeah.
not available
Mhm.
in material module, AP or AR, which
Mhm.
is going fine, other modules.
Mhm.
Why? What is the main holding factor for this asset?
It's a limitation. This is not something configuration at the SAP level only. There is a limitation. Okay. The thumb rule itself says if a company following two different physical year, right? So
Mm-hmm.
asset accounting won't support. There is some inconsistency will come that you will see in the asset accounting when you are defining your depreciation areas, right? So when you are assigning, uh, see, okay, since you bought this, simply, I'll tell you. Maybe there is one simple flow I'll write, then you will understand asset class because since you answered this accounting principle, it's again big topic, but still put it well. Currency, then it's your depreciation key. Especially for the new asset accounting, right? The core, if you talk about the logic, all your depreciation areas, how it will be created based on your accounting principles. Okay. So asset class is linked to accounting principle. This accounting principle is linked to a depreciation, I mean currency, and this currency will be linked to a depreciation key. Whether you read it from left side or right side, there is a lot of interdependency. Whereas you are creating, why there is a specific, when you are creating an asset accounting, there is a limitation. When you are creating your depreciation areas, it should go match with the accounting principles and it should go match with the currency that you will see next few minutes may you will see why non why accounting principles and why this currency is a crucial. Because of that workaround solution in the asset accounting system will understand if you are following a different physical period variant, you need to create one more non-leading ledger, and these ledgers will have direct link to your accounting principle. Mm, this is something very specific for asset accounting. This is nothing to do with other modules, but in asset accounting, you need to create your depreciation areas based on your accounting principles. Without accounting principle, you cannot create any depreciation area. So that's a core logic. You will not see any module very specific for asset accounting. There is very basic when you are defining your chart of depreciation areas. You will see there are interlinked. You heard about this technical clearing account in asset accounting.
Take
There
off.
is
Yes.
yeah. So what it does, correct? It goes with operational and it goes with a valuation part, right? So from where this is coming? This is coming from your accounting principles. Okay. So now once we define ledgers, once we define our ledger group, we will create accounting principle. There you will understand how the mapping is happening and why it is very specific for to create one more ledger for asset accounting. Okay, because in the depreciation area goes with your accounting principles. So to have this, we need to have to create a non-leading ledger with Jan to December. Okay, this is very specific. This is not something. Mm, this is SAP workaround solution. Maybe they will come up with this solution in few years, but the simple structure, like if you're following Jan to December, all the company code should have same structure, physical period variant. Okay, because to understand why it's specifically to asset accounting, we need to go with very deep with the depreciation area and mapping the first few structure of asset accounting. In simple to say, this is a limitation. That's what I said. It's a limitation specific for asset accounting. One thing you need to see, if, for example, just imagine all the company codes having Jan to December. There is no local reporting. Then We don't need to create all these non-leading ledgers. There is no necessity. Your leading ledger is more enough. But since we have this kind of structure and you need to go with your local reporting, so since our financials are April to March, we are creating a non-leading ledger. Once you create this non-leading ledger, so definitely you need to create one more ledger in asset accounting. Otherwise, when you are defining your depreciation areas, you will get an error message because you will link, because see, asset class is linked to your accounting principle. To have this accounting principle, again, ledgers will come, leading ledgers, non-leading ledgers, everything will come here. So that's a core. Okay, clear?
Yeah, Vinay.
Yeah, because some large concepts are there. I know because this is limitations for asset accounting. You will not see anywhere, but only in the asset accounting. Let's create one non-leading ledger for asset accounting. So
Yeah, created H9 you created.
H9. Okay, let's go here. Just put a company code. So all this we are doing it in HU10. The reason is here only we are having a local reporting, right? So then you go and select Jan to December physical year variant. Jan to December, HUL, Jan to December. Okay. And the posting period variant. Jan to December, posting period variant. This is HU, right? Okay. HU posting period, April to March. Okay. Posting period variant. US operations. We given this US operations. Okay. US operations. Or we can, I'm not finding that. Okay, because sure, I'll tell you because system here, I'm just come back HU0. So create HU01. You can see HUL, HU01, HUL, Jan to December. HUL posting, which is Jan to December. Okay, let's go and search now. Okay, let's go back. Since we are just now we done this configuration, now we'll just save it and go back. Okay, just go to the company code. H9, this is. Okay, H9 for asset accounting. Okay. Okay, here. So HUL. Here, HUL. HUL. April to March. See, we can take this Indian operations we have created like this. Okay. In our first step, you can select HU10 posting period as Indian operations. I'll show you from where I picked. See here. If you go to the posting period, HU, for HU10, we have created Indian operations. Okay, I've just selected the same thing, HU10. What we did here, we created one more non-leading ledger specifically for asset accounting, keeping the posting period Jan to December. and fiscal year variant Jan to December and posting period Indian operations. All the currencies automatically it come from the ledgers. Okay, so save it. So now in our entire org structure, we created ledgers, non-leading ledgers, and asset accounting specifically for Jan to December. Do you have some time, like another 10 minutes, because you want to understand one very key concept where assignments, ledger group assignment, then you will understand what is a purpose. Can I take for additional 10 minutes?
Yes, yes.
Okay. See, since we need to tell system, right? Okay, we have ledgers, non-leading ledgers, and there is one more ledger for asset accounting. So we need to group them. Okay, we call it as ledger group, where we will define one ledger group. Here you need to create, just go SPRO. This is your customization screen. Just go here, financial accounting, financial general ledger, ledgers. Go to the parallel accounting and sorry, this ledger, define ledger group. Okay, what I will do, will create a ledger group, HU. Let's take HU11 or HU00. Let's take HUXX, something like ledger group. We have created ledgers, two ledgers we have created. One is H7 and H8. H7 is for my local reporting, which is April to March. And I have created one more ledger for H8, which is asset accounting. What I will do, these ledger groups, we will create an assignment. Okay, see here in this ledger, H7 is for local reporting, H8 is for asset accounting. We will select this representative ledger. Okay, if you select this representative ledger, okay, H8 is not exist. Which one then?
H9.
H9, sorry. Yeah. Okay. H9. So once you create this, then system will understand, okay, we have leading ledgers and we make it as a representative ledger for asset accounting. Then this representative ledger will sync with your leading ledger. Anything you post in the leading ledger and similar thing will happen to your representative ledger. And we have separate ledger, right? H8, it will perform locally like this here. So when you post something transaction, it will pick in the Jan period. For non-leading ledger, it will you can see the values in the Jan period, which is 10th period. But whereas in Jan to December, it will go in first period. Whereas in April to March, it will post in the 10th period. And you mentioned this specifically for asset accounting is a representative ledger, right? Since we are following Jan to December, the same value will be seen in the representative ledger. And this is where the integration will happen. Okay, understood this one. So in this ledger group, we will take it to the asset accounting while we are defining the accounting principle. Okay, then system will understand. Okay, so system will understand one accounting principle is US GAAP since my company is in US, whereas I'm using leading ledger. So and have local reporting. How system will understand local reporting, and with the help of ledger group, this ledger group, if you go inside and see, if you go and see here, since it is a representative, right? All the values will come from leading ledger, whereas 7H7 is your non-leading ledger. Then you will create one more depreciation area in the asset accounting to match with our local reporting. Since we are following this arc structure. Okay, I'll just take a pause, but have you guys understood? The first question is because maybe you are not seeing these kind of structures in, I don't know, maybe if you're working in the organization, maybe definitely you've seen, but maybe if you're attending or going through some classroom trainings, definitely you will not see these kind of three structures, basically. The core point, how we are doing group reporting, how we are understanding the physical year, how we are creating our charts, correct? What is the purpose of leading and non-leading? So, and since we have these kind of structure, definitely, see, you need to understand in this way, in the real time. This is what real time. This is not something which we are talking directly from. This is my company project which I'm explaining. So this is where we define our configurations. This is where we go with our ledgers, non-leading ledgers. Everything is interdependent. If you're not creating this ledger group, if you're not creating asset, right, in the depreciation area, you cannot get, because there is a book depreciation for your ledgers, then book depreciation for local reporting. To have this reporting, definitely you should have a non-leading ledgers. And S4HANA is like very tightly integrated with asset accounting, because this accounting principle plays a very, very important role. So the one last topic is left out, that accounting principle. So once you define the accounting principle, then you will understand what is this group, why we have created this representative ledger, like HUXX. I'll keep it HUXX. So then you will understand how the reporting should go. Any questions so far? There's one topic, if you spend me another 5 minutes, I can cover this accounting principle, so that you will see the assignments, why we are specifying the ledger groups, why the asset accounting ledger came into picture. Can I? Just because if we cover this, then we can start CO, because this is what the basic configurations we need. Can
Yes.
I?
Yes,
Yes,
you
good.
Yeah, thank you, please. Okay, accounting principles. This is very important, okay? Accounting principles. So during in your client discussion, right? See here, if you have three structures, three company codes, definitely every company will have their own accounting principles. Let's take example. In our we have a three. Okay, so definitely we need US GAAP. This is my main company. Okay, GAAP, G, GAAP. We need a main, and we having a local GAAP, which is India. Okay, so we can take IN GAAP or Indian Accounting Standard, and we have German GAAP. Okay. Let's create in the system so that you will understand German GAAP. Okay. These are my three accounting principles as per my company structure. Okay. So let's go into the system. /SPRO. Let's go to the reference. Financial accounting. Financial accounting. Just go to the ledgers. So parallel accounting. Define accounting principles. Okay. I'll take it HUUS. So HUL, just keeping like reference. US GAAP, HUIN, HUL. I'll take it as Indian standards. In Indian GAAP, or we'll take it Indian GAAP or
Yes.
Indian, yeah, IAS. I will take it Indian IAS, HUGE, HUL. We'll take it as German GRMN, German GAAP. Okay. Let's go and create in the system that accounting principle assignments. Okay. So let's go in the system. Go back. Accounting principles. Just go to the structure. HUUS we created. HUIN. HUGE. Okay. HUGE. So German HU, is it the right one? HUG.
Yeah, right.
Okay. So first step, if you see the org structure at the beginning, we said all our group reporting should have same chart of account physical year, but the main company, when you are performing, right, it should link to your leading ledger, correct? So when you are defining in the system, when you are mapping, when you're mapping US GAAP, you want all your reports, correct? It's your leading ledger, correct? When you're performing all your group reporting at your main company level, you will get all the values from your leading ledger. Whereas in India, we have created the structure local reporting, correct? Where we define a non-leading ledger, and since it has limitation, then we created one more asset accounting. Then for asset accounting, we make it as a representative ledger and kept non-leading ledger as is, correct? So then we have created a ledger group, correct? In this ledger group, we have these two principles. One, asset accounting, make it as a representative, and non-leading ledger, we have this. So what you will do, you will assign for India as a group HUXX. Okay. See here, it carries the ledger H7 and H8. H7 is for your local reporting. In India, we are doing local reporting, correct? And H8 is for asset accounting. So since asset account is marked as a representative ledger, it will fetch the value from your leading ledger. Since India, I want to do a local reporting as per April to March, I have clicked this as a non-leading ledger. Then you will map this group. And HU for Germany, we have our another accounting principle right here, H7, non-leading ledger. You will select this non-leading ledger. So H7. Okay, see here. US GAAP, you want to get all your reports through ledgers. It will come through the leading ledger. In India, we are doing local reporting, correct? So to match with the local reporting, we followed April to March. Since company having a deviations in the asset accounting, what we did, we created one more for asset accounting. Then we group them, and asset accounting we marked as a representative ledger since it is following same Jan to December. Whereas non-leading ledger, we created April to March. That grouping we have assigned here. And Germany, we can use non-leading ledger concept when you're doing the reporting. This is where the link and integration will happen when you're doing the group reporting. And the same concept will go forward to the asset accounting. Asset accounting, when you want to fetch the reports in local reporting, it will take from the accounting principle. And you want to do a local reporting, so then it will fetch from your accounting principle. And if you look at the core logic, this is what I said. Asset accounting is when you're defining asset class is linked to accounting principle, and which is followed by your currency. Then it will go to the depreciation key. And this is where the core logic of understanding ledgers, non-leading ledgers, and the accounting principle assignment. So this is what the structure. This is, if you look at as a FI consultant, this is should be the basic structure everyone should know. Understood so far? The core logics I'm talking. This is where when you go into the client discussions, when you go and understand multiple company codes, you should be very, very careful. You know, the key points. What is my chart? What is my physical? How I treat my ledgers? How I group them? All these are the very key concepts. So I'll take a pause. Any questions? I know it took
Yeah,
some 30 minutes. Yes, please.
in German, why we are assigning non-leading ledgers for India?
Non-leading ledger for India. Just you can mark it, no? Just local reporting. You want to do a local reporting,
Okay.
correct?
If
Non-leading ledger,
suppose
you are doing local reporting. Yeah. Tell me. Go
suppose
ahead.
if German from June to July like that,
Create one
at
more.
that time we need
Create
to
one.
assign.
Yes. Yes. Yes.
Okay.
Exactly. Your point is right. That's what. Again, it all go with the structures. See, they're using same chart of account, right? So
Yeah. Yeah.
when you are having a discussions, like that is a base. Your physical period is your base. That's it.
Okay.
Okay.
But
Any
for
questions?
sir, for Germany, we are following Jan to December, right?
Yeah. Jan to December. Yes.
Then we are following non-leading ledger April to March of
Yeah,
India.
yeah, because the local reporting, that's what you want to do in a German gap, right? So you can create one more, what do you say? You can create one more non-leading ledger. Okay. So keep it as like Jan to December and you can perform. You can't assign this ledger here again. So any one ledger, you can't assign. You need to create one more non-leading ledger, how we created for India, right? Just create one ledger, just assign that. It will map.
Okay. Okay. Okay.
Okay. So at least you understood this structure. This is basic FI. I think one should know this. Okay. So now our system is also ready with the basic FI settings. Only thing we need to touch base on, right, GL creations and all. Just quickly, I mean, I don't want to take now because it is almost 2 hours. But next class, we will just create some GLs. Then we are good to start with our core CO. But at least now you understood this. Anyone? If you are
Yes, yes.
covered earlier. So this is way in the real time also it goes. A lot of discussions will happen, a lot of user defined currencies, then some concepts involved. So this is a way you need to understand. Okay. If no questions, yes. Anybody, any questions? Just let me know. If no questions, then we can close.
Thank you, Vinay. My side, no questions.
Yeah. At least you
Really, I learned a
understood, right?
lot of
Like
new
in.
things. Yeah, really, I
Mhm.
understood, and I learned a lot of new things today.
Oh, okay.
Thank
Thank you
you.
for the feedback. Yeah, thank you.
Mm.
No problem. See, this is where we need to go in deep and understand. See, the objective is not to go and define something, but everything is interlinked. In the real time, this is what it happens. Okay. Just imagine there is a 3 company code. Just imagine, like, I've seen one project like we have 60 to 70 company code. A lot of discussions happen. Correct. Client will deviate something. So at that time, we need to be very conceptually very strong to answer them, and we need to defend this is deviating from your standard SAP. See, client may have their own systems. For us, SAP is my standard. Correct. So get all the process into the SAP. So in that time, you need to have a lot of discussions like this. Okay. No problem. We'll go in deep. Okay. Thank you. Thanks for the extra time also, guys. So
Thank you. Thank you.
yeah. Who is
Thanks.
Kiran Kumar? Kiran?
Thank you, Vinod. Thank you, Narasimha.
Yeah, no problem. Kiran? I mean, you're not speaking. Last time also you didn't speak. Are you there, Kiran?
He
Doesn't
sent
answer.
message in
Yeah, but he's
group
not
chat.
speaking. That's what.
Okay.
Group currency 30 will create at the global level, right? Correct. That's why we maintain the controlling area. But group currency is maintained at company code specific, does not arise. Data consistent during the material ledger. Can you clear that? So definitely I'll answer you. Okay. But why you're not speaking? I'm just out of curiosity. Hmm. Okay. No problem. I'll cover this next. It is too late and some people already left, Kiran. I'll take a note on this. Okay. Thank you, guys. Let me copy
Thanks,
this
Vinod.
and keep it. Yeah. But I need to speak and I'll speak, Kiran. Thank you, guys. Thank you. Bye.
Thanks.
Thank you. Thank you.
Bye.